Switching gears now to the U.S. economy, there were some bright spots in this morning's economic releases. We had better than expected jobless claims and better than expected housing starts. Now, one economist not surprised by the uptick in housing starts is Stuart Hoffman. Stuart has lived up to his title as a Bloomberg best economist. His estimate for housing starts was spot on. And Stuart is chief economist at PNC Financial Services. He joins us now from Pittsburgh. Welcome, Stuart. Good to have you on the show again. So tell me, what do you make of this morning's housing starts?
Well, thank you for noting. Yeah, it did go up as we had forecasted, but you know, we're not popping any champagne bottles here. We're seeing a small lift in housing starts. I saw an even bigger lift in permits. And the nice thing is the starts were pretty much across the board regionally. Multifamily, meaning apartments, are much stronger than single-family homes, and that's what I think you're seeing part of here. So, you know, they still got to sell them. There's still a lot of houses out there that are unsold, so builders are certainly not getting carried away. But I think the fear of a double dip, so to speak, in housing, that housing starts were just going to go down, 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 hasn't occurred in the month of May, and I don't think it will occur over the rest of this year, but we're sort of just stuck in the basement for housing.
Which leads me to my next point here, Stuart. A lot of people talking about what does this mean, in fact, for home prices? Some people talking about a 25% drop in home prices potentially before we see the bottom. Well, Inside Track had this interesting guest on. It was yesterday, Donald Brownstein. He's the CEO of Structured Portfolio Management. This is a mortgage-backed securities hedge fund that's returned 28% on average per year over the last 13 years. Well, he made this point about sales of distressed homes really skewing the price trends, and I want you to take a listen.
Since distressed sales have tended to take place, as they should, at lower levels than non-distressed sales, what ends up happening as a result, it looks like the total is coming down. But actually, the non-distressed sales have been fairly stable, and in fact, actually went up a little bit.
So this gets into, I mean, this is what you do, right, is sort of parse through the data and figure out where you really need to focus. Do you agree with Brownstein there that a lot of the data is skewed by sort of the foreclosure crisis as well as now distressed sales?
Yeah, maybe not skewed. It's just we have a two-tiered market. All distressed homes, which are basically any homes where the owner hasn't made a payment or it's in arrears. That's about 40% of all home sales recently. And you're right, there's nothing but downward pressure. There's another house just like it around the corner. A lot of those are being bought by bigger investors, people not necessarily going to live in their home, but you know, trying to get a bargain. And that's very prevalent in a lot of major, you know, cities in Florida, California, and elsewhere. If you look at house markets where they're not distressed, where not every house has a for sale sign, like very much in places like Pittsburgh, but other places in Texas, and it's not a distressed sale, prices are stable. And sales are not accelerating, but you're seeing prices stable. So it is a very two-tiered market. So when you look at these national average numbers, sort of 60% of the sales show prices fairly stable. 40% show these big depressed home prices, and that's why this down 5 or 6% is sort of a, you know, an average of the two, and it is very much dependent on where you're at and what your house is for sale. And if it's distressed, prices are going down. If it's not, you got a chance of maybe selling your house price at about the same price it was a couple years ago.
So, Stuart, when it comes to the U.S. economic recovery, with this two-tiered system in place, which one's more important as it relates to the total U.S. economy?
Well, I mean, they're both important. You know, clearing out the distressed homes, and that's going to take a while, is going to continue to put pressure on the housing market in general. And of course, there's not much incentive for builders to build a lot of new homes. You know, we saw the small increase, but certainly not an upside breakout. So I think they're both important. And but the fact that we have so many distressed sales going on and so much property still around is going to be a drag on the housing market. I think what's more important to the overall economy is whether manufacturing gets sort of back on track, given the real big pullbacks in auto production we're seeing reflected in like the Philadelphia Fed Index and a few others. If we get through that and we see better auto sales, better auto production, better manufacturing, I think the economy will get through this soft spot, and it is deja vu all over again with with a lot of the economy looking weak, and us watching pictures of riots in Greece like we did in the spring of 2010, yet the economy and the financial markets had a better finish to 2010, and I think we'll see that again in 2011.
Stuart, let me ask you a question. How much is the foreclosure process? There's a lot of debate about banks foreclosing and the processes that they use to foreclose. How much of that is potentially slowing down this housing recovery?
Well, I'm not an expert on that, and certainly our PNC and our mortgage company are very, much involved in this process. I think it has probably held back sales of certain homes that are, either not listed or being listed, and have a number, not just banks, but the originators, the lawyers, the ultimate maybe mortgage holder. So it is a very complicated processing. Securitization worked great and will continue to work very well, but not when you have such distressed properties and so many different parties involved between the homeowner and the ultimate, say, holder of the mortgage security. So I think it is holding back the economy, but we're also seeing some improvement in the commercial side of the economy, and particularly the multifamily side, the apartment and condo side of home building. I think that's where we're going to see more signs of improvement over the coming year.
All right, Stuart, thank you so much for joining us. Do appreciate your insight. That was Stuart Hoffman, PNC Chief Economist.